Yeah, Naj, it wasn't it. I know. We'll look at that. It's like a 50 to 1 winner, that one. And I got taken in first time. Lovely. We'll look at that. And it just goes to show, I want to do a little comparison with the pure macro versus the technically savvy entry, and just show you the advantage of that technical savvy entry. I'll get my words right eventually. Yeah. And also explain what I'm going to do with those in terms of the Fed meeting coming up. So we've got quite a bit to cover. Yeah, Ram. We'll be on to that, Ram. Don't worry. That's the main meal of the day, Ram. We'll get on to that. Okay, folks. So before we get going, just a quick introduction. Remember the five core elements there are to good trading: trading psychology. Always need to watch, should you even be trading? We can get ourselves in bad frames of minds, and that's when we're likely to take too much risk and make bad decisions. Second, need to know the macro fundamental bias. Even if we're not taking a macro fundamental trade per se, you still need to know what it is, and that can show you where to technically enter. Thirdly, we need to understand the current sentiment. Like today, we've got some really big events coming up, so it's not a great environment to be trading in the morning. Um, and fourthly, we need to understand our technicals so that we can enter simply as possible with as least risk as possible to give us the best upside that's possible. And finally, risk management. Position size stops, knowing your downside before you enter. You've got to work that out. If you haven't worked that out yet, make sure you do. How much risk per trade, what your position size is going to be, what your stops are going to be, and what your maximum loss is every time. Or else what will happen is you'll over leverage on one trade and it will skew your results. Or you'll under leverage on a good trade, right? And you'll skew your results. So have your risk parameter set up. Now you can use more risk for higher probability trades, but you got to be careful in doing that as well, because you never know which trade is going to work out. So remember, in terms of daily preparation, the first thing we're always going to be looking at is the news feed. Right, I want to see what's going on. Then I want to be looking at the economic calendar because I want to know where are we? I want to know what's coming up. Then I will look at interest rate tracker. That shows me when interest rate expectations rapidly change and when market expectations are changed. And we'll have a look at the Australian CPI data and how that's marginally changed expectations for the next interest rate decision, but only mildly. And it's not really a great trade, but we'll go through that as well. And of course, look at the implied volatility tracker, which gives us some great entries, great turning points, where we just see major turning points in the market. Really going to be helpful for the euro dollar, right, for today, and really helpful for gold. These are going to be really key levels to be looking at. Right. Okay, so without further ado, remember as well, if you haven't gone through the trading course, make sure you have a look through our course here and go through the macro fundamental masterclass. The core really to macro fundamentals is this three-step analysis process. I just repeat it all the time. What's the baseline? What's expected? What will be the surprise and what's changed? Okay, so we'll use this when we're looking at for the Fed meeting tonight, Ram. Okay, we're going to look at what's expected, what will be a surprise, and whether that changes the bigger picture, right? And we'll look at that and how it's going to impact equities, gold, and the dollar. Right. So before we get stuck into the session, I think what we'll do is we'll just recap the trades from yesterday, and just I'll explain how I'm going to manage it. So first of all, let's look at gold, right? Now, yesterday we were looking, right, if you remember, at this trend line break for an entry. Now, as price continued to contain under that level during the session, when it just came up to at 4 o'clock UK time, I was just signing off and I saw that level and I saw how beautifully defined that trend line was. In other words, when you looked at that level, it's such a, if you look at gold, you see level, break, level, break, level, break, level, break. And we took one of these earlier, right? Level break, right? So now had the entry, and that was with a $7 stop. I think I put a $5 stop on my actual entry, even tighter than that. And you can see that price immediately ran up. Now it ran up here very quickly with a nice breakout, and there's a nice 10 to 1 winner, right? I took 2/3 of my position off there and left the remaining third. And now I've taken the final third off as we hit up at that R2 pivot point. So you can see that what is that? Is that, yeah, it's a 20 to 7 to 1 winner, right? So you can see, oh, Ram, excellent. And Ram took the trade at the trend line, took up the profit with 0.15 to pass your advantage as I was going out. Right, so Ram, well done, mate. Great work. Savvy trading, right? Minimal risk. Got your goal. Good job. Well done, Ram. Really delighted to hear that. And thank you very much. No, thank you for sharing it as well. We need to celebrate the wins. Trading is difficult enough, right? So we celebrate the wins. Well done, right? Good work. And the lesson here, the beauty of it, you see, very small risk. You see, if you've been stopped out, you lose $7. That's it. You see, you lose $7. Who cares? As long as you're managing your risk, it's okay. You can live with that, right? And you could try it up to 3 times. So the worst case scenario is it's a $21 loss. Rather than entering long here, right? And then you get faked out, and then before you know it, you're $100 down, and then you'll have the conundrum, well, do I exit? Do I not? That's the thing you want to avoid, right? So that's the beauty of these technically savvy entries. And of course, we're in a wickedly trending market. So this is the way we take advantage of it. Yes, we got a bit lucky on Trump's comments last night on the dollar. But you kind of yes and no. You know what I mean? If the market's going to go, it's going to go to the upside, and we knew that. So that's a nice trade. Now, because we're coming up to the Federal Reserve meeting, that has the capacity to change the dollar outlook. So it's all change. So I've taken off all my gold position closed, right? Looking again for the next session. Now, the dollar yen, again, right? Now, here, got in at that nice level. You can see down here, this is like a 50 to 1, 45 to 1 risk reward. Great trade, right? Again, taken in the first time. And as I said, when you hit sort of 20, remember that broke during the session, if you remember, right? So took about 2/3 of the position off as we went down into this drop here, because there wasn't any reason for that necessarily. There was an Iranian headline, if you remember, maybe an explosion. Is there intervention? Is there not? There's nothing really driving that. So took the majority of profit, about 75% off, right? Maybe a little, maybe 60, 66%. And then as price goes down here, I've taken basically 95% off, and I'm just leaving 5% for a Hail Mary to see if we can just get this dollar yen moving lower. Okay, I've got an index. When we were looking at this trade, right, and we were saying, where do we expect the dollar yen to go? We're expecting the dollar yen to be moving down to 145, but very difficult to get the timing. So we were looking at buying a put option or buying a long yen short dollar index. I bought a long yen short dollar index because it's just a way of managing the risk. Yeah, thank you. Exactly. Always delivering. Yeah. Well said, Suk. Yeah. Exactly. Thank you, Mr. President. And that's dropped it nicely lower. And could we get down 144 or something like that, 143? So I'll leave that last bit in. But we got risk coming up, you see. And it'd be nice. Oh, hang on. Let me just not move that. 138. It needs to be 38. That's it. I'll leave that in place to see what the maximum we can get from it. Okay. See if we can get 100 risk reward, right? That would be beautiful. But you see, it's possible. You see, if you're just risking $10, £10, €10, and you're 40 up to 1 up, that's £400, €400 when you only risk 10. You don't need to be a mathematical genius to realize that mathematically that's very helpful. So for later, the risk that I see is, let's have a look. And now Jem's just yeah, do check out Najam's link. Very funny. Um, I'll just quickly show you it here. It's good value. All right. When Bitcoin get hit there and he's no more winning. Now, what I'm looking for here is the potential, or I'll go through the rationale recently, for the dollar to strengthen on this Fed meeting. It's partly political, okay, it's partly economical, and what I'm really looking for is an opportunity to short the euro dollar from a clear level. Now, here's like the thing to pay attention to. I'm not taking any trades this morning, right? But the area I'm looking at is here, this 1.1970, right? So that's, you see, that's a clear level here, here, here. You got nice, obvious sort of line, right? Just like this was a nice clear level here above those highs, right? Taking out those highs, clear level. If we see a more, a sort of more hawkish Fed, which I think we're quite likely to see, that's my buy. Could be, like, don't get me wrong, I'm completely wrong. I'm not trying to make a prediction. I'm not prof or anything like that. But I'll explain the rationale. There is potential for dollar to strengthen here. Then I'll be looking at entering euro dollar short here with a 5 point stop, right? At that 1.1969. But I'll come back here and say price consolidates like this and you get a new level that's clearly like defined, I would use that as my entry and try up to 3 times. So maximum risking is 15 points. And remember, with a kind of Fed interest rate decision, you have to be careful that your spread hasn't become too wide. Because if your spread is like 12 or 13 points, right, and you get taken in, you're going to instantly be taken out as well. So you've got to make sure that your spread has not widened. So that could be looking for a level after the news, right? So the news could go and it could go whip, 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 whip around. And then once the spread settles down, then you can look at this kind of level. For now, this is what I'm looking at, right? But if that breaks, okay, there is the potential to enter it before the break, but I wouldn't, right? I'll wait to the actual Federal Reserve interest rate decision. Okay, so now that's the sort of existing trades done. So very nice. Um, Now, looking at the European Open, what do we got? Where are we? Where are we? Here we go. So first of all, China's divided its first batch of NVIDIA's H200, 400,000 H200 AI chips. That's been lifting sentiment for a couple of days. ANZ is now expecting a 25 basis point hike at next week's RBA meeting. But if you look at short-term interest rate markets, right, we can see, where is it? But that's pretty much expected anyway. There's not much of a change. There's a little bit higher on the hot CPI, but does that change anything? Not really. It's not that and it's not that the Reserve Bank of Australia is now going to start having to hike interest rates increasingly necessarily. It's kind of like probably the last hike, and then things should start settling down. So in this context, it's not. Is it a massive surprise? No. It's just a slightly hotter reading, and that's just slightly supportive for the Aussie US dollar, which is already being boosted higher. Okay. So in other words, no big macro call out of that. European equity futures firmer, earnings from ASML positive, right? Remember the earnings that we've got coming up. That's come up before the open. Nice, strong earnings. We've got Microsoft, Meta, and Apple all coming up Wednesday and Thursday, plus the Fed meeting, plus Tesla. So a very big meeting, and there's going to be a lot of uncertainty. So straight away, that tells us when markets uncertain, yeah, look at the trim CPI, Najam. It's lit Ram. It's called earnings whispers, and you do that and follow their Twitter account, right? And they put it up on Twitter each week. They put the earnings up on Twitter just like this, so it's really handy, right? Really easy to see. It is also within our news squawk, but I find it easy to see it visually like that, right? Um, Now, the FX move was the big de-dollarization theme, and Trump yesterday saying he doesn't think that the dollar declined too much and that you can have it up or down like a yo-yo. That sent the market just selling the dollar wildly, right? Um, but now the attention turns to the FOMC meeting later, where the Fed is expected to pause on rates. So remember, so what's expected? That the Fed's going to pause on interest rates. What will be a surprise? Well, this interest rate meeting from the Federal Reserve, right? There's no dot plot. There's no summary of economic projections, right? Um, so the dot plot is when you start to see what the Fed's looking at going forward. So you don't get that. So what have we got to go on? Well, really, we've just got short-term interest rate markets to go on. And what they're telling us in terms of the expectations is as follows. The Fed's going to cut twice this year. So they're looking for the next cut coming around sort of like maybe potentially coming in from March and then maybe June, right? But by the end of the year, markets are expecting interest rates to be at 3.2%, right? So basically two interest rate cuts expected this year. That's the basic expectation. However, right, it's become political. Trump is desperate for low interest rates. He's saying, he's calling for low interest rates, and he's putting pressure on the Fed. Powell is leaving. There will be a new chair, but Powell's not going to want to respond to that pressure. And there is a very important reason that central banks stay separate to governments. If you make interest rate setting overtly political, everything's political to some extent, but if you make it overtly political, it means that the central bank will be seen to have lost its independence. And if a central bank isn't seen as independent, then the market no longer has confidence in it. And that's why we've got this sort of sell US theme. There's an underlying fear that there's a lack of confidence in the Federal Reserve and the chair being independent. Now, whether that's a real reason for the dollar weakness or not remains to be seen. But the fact is that that still is a real force. So what Trump, not what Powell will probably do is just saying, okay, we're not cutting interest rates because growth in the US has been strong. Okay, inflation is coming back towards target. Unemployment is low. Look at equity markets, right? You know, all-time highs. There's nothing here to say that the US economy is massively struggling. Take a look at core inflation. Look, it's moving lower, right direction. Um, Look at headline inflation, right? Okay, it's at least moving lower. Um, Look at the ADP employment change. Okay, still private jobs being added in the US. Look at the average hourly earnings, still robust. Unemployment rate, still relatively low, right? Headline job openings towards the low end, but still there are jobs being advertised in the US and non-farm payroll jobs still being added. Now you can look through all these details, and some analysts say, okay, but this is not really the true picture. We've got the US administration shut down, but no one's really got a keen sense of what's going on clearly after the US administration government shutdown. But based on the information the Fed does have, um, and certainly from this information here, there's not a desperate need to cut interest rates. So what we're looking at here is a potential snapback in the dollar. That's my basic kind of expectation. Um, Now, if you look at the dollar, you can see we're moving down. We've dropped down to this big support level, right? Now, potential for a false break here and a bounce back up into the level. That's what I'm looking for. Now, remember what I said at the start, good case study for the difference between a pure macro position and a technically driven decision. Now, that dollar Swiss franc long here, right? There was a lot to be said. You see the yield spread diverging, pushing up, pushing the price moving lower. Um, but I said, look, let's get out. If you get a daily close underneath that level, got the daily close on the level, got out, right? So the stop size with this macro position had to be really big, right? So it was I got in around here ish, right? And I think the stop was down there ish, something like that. And then looking for a 2 to 1. Yeah, it was about two, 1.5 to 1, 2 to 1, something like that. Um, and then as soon as you got that close underneath that level, okay, get out, right? So got out without taking the full stop, which is good. But you see, with the macro position, you had to have a much wider stop to allow for the fluctuations. Nothing wrong with it, right? But, the yield spread pushing up, still pushing up even higher, ultimately expecting this to go up. But the problem is, the market can stay kind of irrational longer than you can stay solvent. So that's where you've got to put your stops in. Whereas actually a very simple stop loss, a very simple entry here, long or short would have been superior in terms of risk reward. So you can have the same outlook, um, but you can have one trade that's really profitable and another scenario where it's not profitable at all. So that's where you've got to be technically savvy. So here, okay, the trade didn't work out. That's fine. That's trading. That's the way it goes. Um, but the macro positioning, that's the weakness to it, right? Can this snap higher? Yes, it could. So if you want to express like a dollar Swiss franc long, you start to look at things like where you can get clear reversals, like here, right? Left shoulder, right shoulder, head. Then look for things like this. Oh, okay. If I break this neckline, right, I'll go long at a $5 stop, right? Hit 20 points, take half of it off, move the rest to break even, and then you just sat there, right? Lovely area. Now, as you're not taking that now, right? But look through that as you go through the session and look through it through the Fed meeting, right? There's another potential left shoulder, right shoulder neckline here, right? That could be an important area for later. Right? I'll just leave it here in as an example. And look, do you see that trade there with 5 stops could be the same trade, a 5 point stop, the same trade as a macro position that says, okay, I'll go long on the break here with a right, is that 220? What is it? How many points is that? 95 stop points. So you see, same trade outlook, same idea, one with 5, 10, 15 points risk, one with 95 point risks, but the same outlook. And of course, once that's moved up to this, once this has moved to that target there is 18 to 1 risk reward, where that's 1 to 1 risk reward. Right? So I hope you can see that. So let's go and have a little look at Aussie from last night. Right, Aussie CPI trimmed, coming above market's maximum expectations. So all supportive for the Australian dollar. Let's have a look how the Aussie reacted overnight. Now, with that dollar weakness, it should have just been loving that. And you can see, right, nice strong move. Um, but then fading. Now, it's not a surprise it's faded higher on that move because that's Trump's comments. That's going to be the CPI. So it's up and then just paired the move. Because does it change anything? No. Okay, the RBA is going to hike rates. So what? It's not like they're changing and they're going to be embarking on more and more interest rate hikes. It's just taking a bit lo longer. And a lot of the Aussie dollar strength on that RBA has already been anticipated. So there's nothing fresh there. There's no fresh data. And instead, what you're looking for here is there a key level here for this to retrace lower, right? Maybe underneath that 68967. I'm gonna leave Aussie US dollar alone. But that's kind of the outlook on that CPI print, right? Is it bullish? Yes. Is it a surprise? Yes, it is. Was a surprise. Does it change the bigger picture? No, right? That's the big picture, right? Yeah, the RBA should hike. Got Bank of Canada interest rate decision as well. Always worth looking at that for CAD. Um, have a look through the news feed for more details on the Bank of Canada meeting. I'm not up to speed with that right now. And then we've got the Fed meeting. Now, a couple of things for the Fed meeting. Just in terms of look historical volatility, if you look at the Fed meeting, you see the bias for the euro dollar on the Fed decision is an average return that's biased to the negative side. Now, when the euro dollar's fallen, if it falls 1%, right, that's kind of towards the maximum of what it falls on the Fed decision day. So in terms of targets, right, if you were looking for a target and price was where it currently is, and you had a 1% fall, that would be down to here, right? Down to that region. So that would be like your daily target for a fall. Notice that the maximum drops, right, about 1.88%, I think is the biggest drop, 1.88%. So if you got like a move of like 2% on the day, right, that's what the maximum you could expect based on historical volatility. Now, if you take this out to like 3 days, you can see that the maximum loss is about 1.93%, but you can get over 1%. So straight away, what you can see is a 1% fall is a reasonable target, which is down to this level here. So, Ram, if you get a more hawkish pal, right, and you get in at a decent level, right, there's a reasonable target for euro dollar to the downside, right? Upside again, 1% would be a reasonable target. Now, if we looked at gold, right, on the Fed meeting, reasonable upside. Look, quite a few times get 2% gain, and quite a few times get 2% loss. So if it's more um, hawkish and we see dollar strength, I wouldn't short gold because gold's just been relentlessly bid. But if it's more dovish, if there's a surprise interest rate cut, 2% higher in gold looks reasonable, right? So if the Fed do surprise markets and cut, then look for gold to hit about 2% upside, right, on that decision. Folks, that is it. The key things to be aware of is pick your levels on these kind of things, right? Um, and the level I'm just going to be looking at, for me, it's going to be a euro dollar trade, looking for a 1% move to the downside. And that key level for me at the moment is the 970. Okay. Then I'll be obviously back in the futures room and I'll be looking at those sort of order flows for the futures room, slightly different technique, different way of trading. So I'll see you guys later for that. Other than that, folks, have a very good afternoon. Hope that's been helpful. A lot of information. Just don't get stuck into stupid trades before the Fed meeting. That's the number one thing. Yeah. Lauren, take care. Brett, take care. Cheers, Najem. See you later. Yeah, Brian. Oh, Brian, did you get that gold long yesterday? Yeah, good man. Oh, good man. That's what I want to hear. Excellent. Well done. Yeah, cheers, Ram. Yeah, nice one. Good work, mate. See you later, folks. Bye for now.